The dollar rose sharply as Treasury yields jumped in response to Fed expectations. Where do you go from here? The US dollar continued higher in Asia today after kicking off the new year with a strong rally from the open in New York. It was underpinned by US Treasury yields, with the benchmark 10-year bond leaping from 1.5% to trade above 1.63%. Expectations of further hikes from the Federal Reserve fueled the surge in interest rates across the curve. While risk sentiment was positive, the growth in commodity-linked currencies of AUD, CAD, NOK, and NZD all got hit in the North American session but have managed to recover some ground today. The yield-sensitive USD/JPY made a 4-year high, breaking above the November peak of 115.52. Gold and silver were pummeled in the US dollar melee, but crude oil was steady for the most part, trading above $76 a barrel. Australia's ASX 200 and Japan's Nikkei 225 went higher today, following on from a positive start to the year from Wall Street overnight. Both bourses were up over 1.8% during the day. Going in the other direction, Hong Kong and Chinese mainland indices were lower as the People's Bank of China didn't add as much liquidity as expected. Additionally, the renewable sector was rattled by a Chinese government announcement that they will be removing the subsidy for new energy vehicles. After 2023, the benchmark CSI 300 was down over 1.3% at one stage, but managed to claw back some of the losses. In afternoon trade in the US later today, the ISM Manufacturing Survey is due for release as well as the Canadian Manufacturing PMI. The US dollar index rejected a move toward the recent low of 95.517, and this level may continue to provide support. An ascending trendline that currently intersects just below 95.00 might also provide support, as well as the pivot point at 94.561 or previous lows at 93.278 and 91.947. The 0.58% rally in the US session has seen it bump against the 21-day simple moving average, and a decisive break above it could see near-term bullish momentum evolve. Potential resistance may lie at the recent highs of 96.906 and 96.938. Despite the significant move, volatility remains subdued, as shown by the relative narrowness of the 21-day SMA-based Bollinger Band. Chart created in TradingView. Written by Daniel McCarthy, strategist for dailyfx.com. To contact Daniel, use the comments section below or at Dan McCarthyFX on Twitter.